everybody. Welcome to Monday Morning Must Knows. My name is Merlin Rothfeld. Man, what a week we had. Lots of volatility. Most of the broad market indexes ending on higher notes with great news on Friday from our financial service companies like JPMorgan, Wells Fargo, all posting fantastic earnings numbers on Friday, which vaulted the markets and gave us a good push for our markets going forward. Optimism going into earnings season, and every single company that reported earnings on Friday beat earnings. Now, will that be the tone going forward? I don't know, but I can tell you we have 191 companies reporting earnings this week, and there are some huge names on here to continue with our trend. Unfortunately, none of them are on Monday. We start things off on Tuesday with some financial service companies. You got Bank of America, Citigroup, Goldman Sachs, PNC Financial, and then Johnson & Johnson, United Health Group, and United Airlines. So some major names there. And that continues on Wednesday with Kinder Morgan, Abbott Labs, CSX, Alcoa, Synchrony Financial, U.S. Bancorp, and Discovery Financial Services. On Thursday, you've got Netflix, Blackstone, Intuitive Surgical, American Airlines, Morgan Stanley, Nokia, and Freeport-McMoRan. And before I run out of breath, let's knock out Friday while we're at it. Procter & Gamble, Schlumberger, American Express, and Ally Financial. As you can see, that's a slew of companies reporting earnings. So an exciting week to be sure. Last week we started things off on Friday now. And for the next couple weeks, pretty much every single day, you're going to have some name that you might know and recognize coming out with an earnings statement. So of course, use caution. And this is not all of the earnings that are being reported. This is just cherry picking some of the major names with the biggest volume, most liquidity, and the most attention. Now, we've been talking in the United States for, seems like years now, inflation. Today, I'm not talking about inflation for the United States. Let's talk about it for the rest of the world. It's a very interesting week because we have so many PPI and consumer price index numbers coming out for the entire globe. So let's start things off by bringing up our PPI inflation data and CPI inflation data for other parts of the world. We're measuring global inflation here. On Monday, the Swiss franc comes out with their numbers at 2:30 p.m. Eastern Time. On Tuesday, Canada comes out with their numbers. That's going to be at 8:30 a.m. Eastern Time, followed up by New Zealand on Tuesday at 5:45 a.m. Eastern Time. I guess I could have put these in chronological order, but a little bit of a leapfrog there with Canada and New Zealand. Next, we've got the UK with the British pound reporting their CPI numbers Wednesday at 2 a.m. Eastern Time, followed, and lastly, by the euro. That's Thursday morning at 5 a.m. Eastern Time. So a very busy day from an inflation perspective. And I think that this is really important. The most recent numbers we saw for the U.S. shows continuing declines in inflationary pressure, which is good. That's great. We want to see more of that. But is that the case for other parts of the world? If it is, and then we'll probably follow suit with what the U.S. is doing with regards to cutting rates. If not, we may see them hold or maybe even raise rates. So this will be very key for any of you who are trading currencies. And as you can see on that list, got a lot of major currency pairs could be impacted here. The Swiss franc, the Canadian dollar, New Zealand dollar, British pound, and the euro. Now that brings us to one more important piece of international news, which is rate statements. Yes, we have a rate statement coming out for the European Union. The ECB will be making their announcement. And right now the expectations are they're going to lower by 25 basis points from 3.65% to 3.4%. That should be Thursday at 8:15 a.m. Eastern Time. And finally, the last piece here brings us back to the United States. If you read through the last FOMC meeting minutes, which came out last Wednesday, it was very clear that there are kind of three key points that the U.S. officials are looking at least the Fed officials are looking at. And one of those, which was kind of different from normal, was consumer spending. There were concerns that consumer spending is declining. Of course, one of our broader measures of consumption is going to be the retail sales number. How much are you and I spending buying goods and services? Now, I know I'm doing my part because Amazon Prime Day drained my account. Man, I did not know I needed 75 more inflatables for my front yard for Halloween, but the price we pay for scaring children. Anyway, let's move on to our discussion and our charts here, which will show you the most recent numbers you can see on that hard red edge. We've been at 0.1%. Now, you'll notice there's been a lot of volatility here, a lot of ebbs and flows above and below that zero line. 0.1% is not really good. We could be optimistic and say, hey, it's positive, right? We see it 0.1. That's a good thing. Sure, it is, but we'd like to see it much higher than that. So the concerns from the Fed may be valid here because those numbers have been rather low for a while. But is that about to change? Right now, the expectations for Thursday's announcement, which is 8:30 a.m. Eastern Time, is not 0.1%. It's slightly higher at 0.3%. So this would be good news for the economy. It would kind of calm down the fears that the Fed has that we are seeing less consumer spending. Now remember, this is only 1 point worth of data. There's many more data points to look at, but this is just one of the key pieces that the Fed is keeping an eye on is consumer spending. And if we see this number start to get better and better, that should lead to more upside movement for equity markets and just more economic growth. That, my friends, is your Monday Morning Must Knows. We'll see you next week.